Good afternoon to everybody, or at least to those that are based in Europe. Good evening if you are in China. Welcome to today's webinar session on blockchain technologies in China. The event is going to be opened by Mr. Bernard de Wit. We are going to wait a couple of seconds or minutes until we get everybody in the room, which is already happening.
Okay, Laura, we are ready.
Okay, great. So, Mr. DeWitt, we are leaving a few 30 seconds to the participants to enter the room progressively. And then we can start. Okay, I think we are almost all here. Oh, we might have some connection problem with Mr. DeWitt. Okay, I think we are ready to go. Mr. DeWitt, even if you don't hear us, we can hear you. So perhaps you can start. Hello? Hello, Mr. DeWitt, are you there? Well, it seems we're having some technical issues. So what we are going to do is we are going to start with the next part of the presentation. Oh, here we are, it seems. Sorry for the technical issue.
Okay, so I think now you hear me, Laura.
Yes, here we are.
Sorry.
No problem.
We had a problem. Yeah. We are ready. Listening to you.
Oh, well, Mr. DeWitt, we are starting the event. So as we understood, we are going to have some welcome speech from your side. So all of us are eager to hear it.
Okay.
People are already inside.
Thank you, Laura. Thank you very much, ladies and gentlemen. It's a real pleasure and an honor for our chamber to organize this afternoon session together with the EU SME Centre. I would say that before introducing very shortly our chamber, it's a pleasure to organize each year an event with the EU SME Centre. US Centre is one of the nice examples of successful undertakings supported by the EU. Our chamber, for those of you who do not know it, our Belgian-Chinese Chamber of Commerce is a business association for companies doing business with China from Belgium and Europe, and for Chinese companies located here in Belgium. We have been created in the 80s. We have more than 550 members. And our purpose is to be a bridge between Belgium and China for enterprises. We change, yeah, we can change. Voilà. What do we do? Well, we organize networking events, we receive delegations, we organize company visits, we have regularly conferences on EU-China relations, we organize seminars either ourselves or in coordination with other organizations like today. We are located here in Belgium, and for those of you who do not know us, you have all our details here through the internet, and I am sure that with the slides of today, you will receive our details. We were very interested to listen to the very good speakers of the EU SME Centre. They will be introduced by Laura after me. I would like to say that blockchain technology is something you need to take into account, and blockchain technology developed in China is even more interesting, as China is the place where blockchain has been mostly developed these last years. What is blockchain? What are the implications for European SMEs? What is China using the technology for? All these questions will be answered this afternoon by our speakers. Our speakers will be introduced by Laura Velasco. So therefore, I will leave her the floor, and then to our speakers. I thank you again for your attention. Thank you. Laura, it's up to you.
Here I am. Thank you very much. It's always a pleasure to cooperate with the Belgian-Chinese Chamber of Commerce. I hope you all are seeing my screen right now. Before actually leaving the floor to today's speakers, I would like to share a couple of slides, a little bit more of a couple of slides of the EU SME Centre, who we are and what we are doing. And I will also be introducing, as Mr. DeWitt was mentioning, the two speakers we have today. The EU SME Centre is a European Union founded project that was launched in 2010. So it's been 11 years running with the aim of helping European SMEs enter the Chinese market. Our goal is to make sure that the companies who are looking into China are well prepared to ensure a success into the Chinese market. At the current moment, we are implemented by 5 chambers of commerce that you can find actually at the bottom of the slide. We are also an official member of the European Enterprise Network, which allows us to work with a lot of partners in Europe. And we have offices located in Beijing. And thanks to EUROCHAMBRES, we are also based in Brussels as a contact point for all those European businesses. For our services, we provide 4 main services, although we also can tailor-make our services for our partners. The first of them is the Knowledge Center. We have an online library accessible for everybody, where you can find over 200 market reports, guidelines, and study cases on a very wide variety of topics. Could be food and beverage, environment and green tech, blockchain technology, taxation, HR, etc. The second service is called Advice Center. In our website, you have a section where, which is called Ask the Expert, where actually we can provide confidential and one-to-one consultation on China-related topics. Here you have a list of different type of, let's say, topics that we can cover, and our experts will be replying to those inquiries within 3 to 4 working days. The third service is our training center. A very good example is what we are doing today. We offer tailor-made trainings based on the needs of the European SMEs. The variety is obviously upon request. Today, blockchain, it's very new and trending topics, but we can also provide trainings on other topics such as knowing your partners in China, e-commerce, digital marketing, etc. Last but not least, we also provide advocacy services as we give voice to those European SMEs that are looking for a more level play field in China, in those, especially in those sectors where actually foreign companies find some roadblocks. This is a list of the partners with whom we cooperate often. And I just want to share our upcoming activities that we are organizing in collaboration with some of our partners in the coming weeks and days. The slides will be distributed afterwards upon request, but we will also be recording this training session and we will be uploading it on our YouTube channel. After this event, you will receive a thank you email with the direct link to this presentation so that you can access it directly. Now, about the speakers. The first of our speakers today, although they are going to be shifting, it's going to be a very dynamic presentation, is Renzo Isler, who is also right now at the moment the director of the EU SME Centre. Renzo is an expert in financial services, strategic insurance, consultancy, business strategy, and strategic planning and risk management. Born in Italy, but being a cosmopolite who has traveled around the world, Renzo has over 15 years of professional experience in China. All of this experience has been developed working with Generali Group, which is one of the largest financial enterprises in Europe. Renzo speaks Italian, English, German, and French, and I think he's fighting with Chinese as well. About our second speaker, Brian, who is right now in Vancouver. Good morning, Brian, for you. He's the managing director of Bravo Well Technology in North America. His areas of expertise are finance and technology, blockchain-based financial services, and blockchain technology. Brian has over 20 years of experience in finance and technology industries, thanks to his cooperation with both American and Chinese entities. He has also collaborating with startups such as Telecom in California or Dynamic FinTech in Shanghai. He's also an independent researcher, mainly in the area of fintech. That is the reason why Brian is here today. And now I don't want to take more time from the speakers. I'm going to stop sharing my presentation and I leave the floor to you. Thank you very much.
Well, thank you, Laura. And thank you also to Mr. David for the introduction, and good day to everyone. Roberto Viola, Director General of DG Connect, just 1 month ago said Europe's ambition is to set the gold standard for blockchain technologies. We have implemented a strong regulatory and policy framework that supports sustainable blockchain innovation, as well as the startup and scale-up ecosystems. Administrations across Europe play a trailblazing role in implementing this exciting and essential new technology. Conversely, Xi Jinping, President of the People's Republic of China, a few months ago underscored the importance and role of blockchain technology in the new round of technological innovation and industrial transformation of China. He highlighted the role of blockchain in promoting data sharing, optimizing business processes, reducing operating costs, improving collaborative efficiency, and building a trusted system. With these premises, with key players singing on the same tune, we can surely say that we are right on the money being here today to discuss the potential and the future of blockchain in the business development of the EU SMEs in China. From the agenda that you see, we have a busy program ahead of us. Brian and I will alternate in presenting 6 modules, which we hope will stimulate your interest and tickle your curiosity. Module 1 is going to be an introduction to blockchain, and then we move on to a parallel comparison of blockchain and the Bitcoin and cryptocurrencies. Then we'll have an overview of the potentials of a blockchain technology, moving then into digging deep in China and to see what are the current developments of blockchain today in China, and concluding with an outlook on future of blockchain both in China and the rest of the world. The final module will be a series of case studies that we will present to your attention, which I hope again that it will tickle your interest and probably and hopefully will bring you to further elaborate and further study on the blockchain technology. So I will be starting on this introduction to blockchain, and I move on to the first part. I want also to express the fact that here this is not going to be a lecture. I don't want this to be a lecture. This is supposed to be a dialogue on blockchain and its applications present and future. So in here, the first thing that is I want to show you a little bit of history. Well, history is a bit of a overstatement because the blockchain is really very, very young technology that has been brought to our attention. So although in 1992, two scientists, Stuart Haber and Scott Stornetta, presented a work on the same concept, it wasn't until 2008 that a formal protocol was written by a Satoshi Nakamoto designing blockchain as we know it today. In 2009, he, she, they, it, whoever that Nakamoto is, created Bitcoin. And for years, blockchain was exclusively associated with Bitcoin. In 2011, already many cryptos mushroomed. We were still remaining in the field of cryptocurrencies. In 2014, with the advent of Ethereum and the Neo smart contracts were introduced. And this was, but it wasn't really until 2018. So we're talking 3 years ago, that blockchain technology became conceptualized for multiple utilizations. And I must say, although there has been a great number of applications, but still they have been used sparingly. And I hope that along this, this presentation that we will have today, we will be able to bring you to an understanding about why this the blockchain has picked up so fast, but at the same time is still in its infancy. So what is blockchain? We are trying, I'm going to try not to be very technical. This is not my objective. But here, blockchain is, it's a kind of a database, which by employing cryptography, records information in a ledger and stores it in a block in such a way that it becomes immutable. Once filled, each block is cast in stone, given a timestamp, and chained together to the previous block via hash code, becoming part of its timeline. Then this string of blocks with their own hash codes, timestamps, and ledgers are housed in a number of computers, which are called nodes, all connected to one another. All of these nodes are potential actors or validators of the next blocks. So clearly here, blocks are decentralized, they're encrypted, so that there is no way of going back, erasing or modifying the data. So the timeline is irreversible. A node can only choose to make changes in the ledger by adding another block to the chain. So here we're already coming to a very crucial part of the advantages of blockchain. It's the fact that you cannot erase what has been cast in stone, what has been written. It cannot be, so you cannot have somebody tampering with the past information or data, erasing them and substituting with something else. Now, that's not possible. The only way to modify a set of information is to add another block and say, oh, the previous block said this, now this has turned into something different. And what is also very important to understand is that no single entity in the network can amend the past data entries in the ledgers, and no single entity can approve new additions to the ledger without the approval by the whole network of nodes. So the decentralization of the data, of all this data is the biggest breakthrough, because in the traditional forms, like for large companies and corporations, they have the data that is centered into big mainframes, put in particular storage areas, in particular rooms or particular locations, and that's it. They're all there. Then of course you have to have another fireproof let's say earthquake-proof location in another place to have a duplicate. But this is not what blockchain is. Blockchain is just exactly the same information, the same data, the same string of information. It is dispersed across a number of computers, and in this case, of course, computers they're called nodes. So at any point in time, only one version of the ledger exists, and each node owns a full and up-to-date copy of the entire ledger. And the distributed nature of the ledger requires that the participants in the network in these nodes to reach a consensus regarding the validity of the new data entries, and by following a specific peer-to-peer protocol. So there is a rule, there is a regulation on how these the players are going to be playing in this protocol, and it's going to be very, very clear what each one of the nodes will have to do in order to accept or not accept an additional block. So to recap on these key concepts, I think that there are key words that we have to remember, you have to keep in mind. Ledger, timestamp, hash codes, all these three things all wrapped up in blocks. The ledger with all the key information, the data, the information, the timestamps, it basically seals the moment that all this data have been stored. The hash code, which is the identifier, which is an alphanumerical number, which is allocated to each block. And it's necessary to have that hash code in order to connect the next block. And in fact, each block contains the data of the previous hash code to which it connects, and its own new hash code, which will be available for the next block to be connected. On top of this, of course, we have the nodes. And the nodes are key because they are the owners of the blockchain, and they have to give consensus for any change that it may be applicable. So in this case, we are creating an immutable database with an irreversible timeline. There are more, let's say, other names and other things that will sometimes come up, like the nonce. Some of you may have heard about it. This is an alphanumerical string, which received after successful completion of a crypto puzzle. And this is mostly utilized for cryptocurrencies. And then you have, of course, a digital signature and the keys to unlock access to the blockchain technology. These are, of course, all parts of a whole system. What is important here for us is to understand the basic structure of the blockchain technology. And also the next important thing to understand before we move to the next phase is to understand the types of blockchains that are available today on the market, that are produced on the market. The first one is the public permissionless. Then we have a public permissioned, and then we have a private one. The names themselves kind of identify what they are. In the public permissionless, it's no restriction. Anyone with an internet connection can get access to the network. It's self-governed, it's anonymous, it's decentralized, it's autonomous. It's a public digital ledger. And it's all, in addition, it's transparent, owned by everybody, and it's immutable. Well, this is the fundamental of Bitcoin and Ethereum, so Ether, as it is the crypto of Ethereum and other cryptocurrencies. And it's this public permissionless, it is mostly utilized for the cryptocurrency blockchain utilization. There's one, but I would say more than just one downside, and it's slow. And the reason why it's slow, especially for the Bitcoin, is that there are so many nodes, so many participants to that. And as you remember, I said that each one of them has to give their okay. So before you get the okay from each one of them, it may take time. In some cases, it may take days before the whole process is completed and it is accepted. The other thing is that it's also costly, because in order to gain possession of a Bitcoin, you have to run X number of trials in order to solve the big puzzle. Brian will be elaborating later on this particular issue. And it is, well, it's a pollutant. Let's put it this way, because in order all the computers to run all those simulations and all those trials, you need a lot of power, you need a lot of energy. So it burns a lot of energy, and it actually goes in a bit of a different direction of this carbon-free concept that the world now is talking about. The second type of blockchain is a permissioned public blockchain. This acts as a closed ecosystem. Users are not freely able to join the network. And this is clearly preferred by centralized organizations in order to secure the record transactions and exchange information between one another. It has an efficient performance, clearly. It is a proper governance structure. It has a decentralized storage. It is cost effective. Downside, well, of course, it's a potentially compromised security. It is under the control of somebody, something, or somebody, some entity. Therefore, it can be subject to censorship. So you cannot say or cannot do or act at will. And it has to follow a much closer protocol in terms of regulation. Even more tighter is the private one, but this for its own purpose. So that's the way they wanted to have it, like that. And the private one is owned and operated by a group of organizations, and the transactions are visible only to the members of the network. So it's a cherry picking kind of network that the owners of a private blockchain chooses to have. And the focus is clearly on privacy instead of a full disclosure, and the security of sensitive information. I think in every one of you, in every one of your minds, you already have pictured examples of cases that could fit into this particular condition. So these three, public, permissionless, public, permissioned, and private, are the typical blockchain types that are currently used on the market. So considering that we will be more or less analyzing non-crypto blockchains, you will see that in our examples, especially in the case studies, we either will be talking about the public permission or the private. So I hope that I have been able to give you a relatively quick and dirty, as we could say, but sufficiently clear explanation of what a blockchain is and the different types of blockchains that are available on the market. And so at this point, I would leave the floor to my friend Brian, who, by the way, I don't envy you, Brian, because I think that for you in Vancouver, it's about 5:30 in the morning. So I hope you have a good cup of coffee with you and try to stay with us. So unless, Brian, if you have perhaps some questions that may have popped up on the Q&A screen that you may have seen, since we may have a little bit of time, you can ask me one or two of those questions and I'll see if I can answer. Brian?
Well, in the meantime, Brian replies, so far we have received no questions, but I remind everybody that they can use the Q&A button that appears on their screen to submit any question they might want in regards to blockchain. We, as you have seen, Renzo and Brian will be taking into this section frequently, and they will be replying little by little. And actually, we have received one. Do you have any example of public and private blockchain?
Yeah. Yeah, of course. And in fact, this is something that we will be presenting at the end in our case studies. So rather than answering directly, I would ask for your patience. Dirk I think it's Dirk Witz. So we will be, I think that we'll be able to answer that question on the module number 6 when we go into case studies.
Okay.
Up to you.
Yep. Thank you, Renzo. Thank you, Laura, for the introduction. And good day, everybody. I'm really pleased to have this opportunity to share some of the knowledge and experiences that I've been working with for the past couple of years on the issues in the areas of fintech. And in continuing the topic following by Renzo, I'm talking about right now, there is a big miss between a lot of people when people talking about blockchain and people automatically thinking about Bitcoins. So right now, today I'm going to talk about some of the major differences and how important blockchain is. So first of all, what is blockchain? What is Bitcoin? Simply put, Bitcoin is both a digital currency and a cryptocurrency. It is a decentralized digital currency without any central bank or single administrator, and it can be sent from user to user on a peer-to-peer Bitcoin blockchain network without a need for intermediaries. So Bitcoin is first created back in January 2009, following the 2008 US subprime mortgage crisis. It follows the idea set out in a white paper by the mysterious and pseudonymous Satoshi Nakamoto. Satoshi wrote in the following on a peer-to-peer online forum. He said, "The root problem with the conventional currency is all the trust that is required to make it work. The central bank must be trusted not to debase the currency, but the history of fiat currency is full of breaches of that trust. Banks must be trusted to hold our money and transfer it electronically, but they lend it out in waves of credit bubbles with barely a fraction in reserves." So Satoshi wanted to create a trustless cash system. He explicitly stated that the reason for creating such digital cash system is to remove the third-party intermediaries that are traditionally required to conduct digital money transfers. So in a way, Bitcoin was created to solve two major problems of the old payment system. The first one is money transfers through third-party, and the second is how to prove the payment, which is the issue of double spending. So Bitcoin is the first decentralized peer-to-peer payment network that is powered by its user with no central authority or middleman. It is composed of a collection of computer nodes that enables a new payment system through consensus algorithm, which is designed to solve the issues of trust between network participants for digital money transactions. In order to make the concept work, adding blocks to each chain must be relatively difficult. So this is where the proof of work and mining comes in. Each block is secured through cryptographic techniques that require miners to commit computing powers in order to add blocks. So used for payments, the consensus algorithm is the final piece in the complex cryptographic puzzle that makes cryptocurrency work. So Bitcoin mining is rewarded by the network through transaction fees and subsidies of new coins to encourage miners to spend their resources on mining new Bitcoin blocks. So what determines the value of the Bitcoin? Ultimately, the value of the Bitcoin is determined by what people will pay for it. So in this case, there's some similarities to how stocks are priced. However, without a government or central authority controlling the supply, value is totally open to interpretation. The process of price discovery, the primary driver of volatility in Bitcoin price, will invite speculation and manipulation. So here are some basic facts for Bitcoin. So the total supply of Bitcoin is limited to 21 million, which means only 21 million Bitcoin can be mined in total. So once miners have unlocked all these amount of Bitcoins, the supply will be exhausted. And currently there are close to 19 million coins being mined as of January 2021. So that represent about 88.5% of the total supply. The price of the Bitcoin gained roughly about 350% during the past 6 months till this past February. And the market cap of Bitcoin just reached over $1 trillion on February 19, 2021. So there are some concepts alongside with the Bitcoin, which is Bitcoin, cryptocurrency, and digital currency. So they're kind of all interrelated. So I'll give a brief definition about some of those concepts. So digital currency is a currency, money or money-like assets that is primarily managed, stored, or exchanged on digital computer system, especially over the internet. So examples of digital currency includes cryptocurrencies, virtual currencies, central bank digital currencies, and e-cash. And digital currency can be either centralized, which there's a central point of control over money supply, or decentralized, where money supply can come from various sources. The other one, cryptocurrency, or we call it cryptos, is a digital and virtual currency that is secured by cryptography distributed across a large number of computer networks, which makes it nearly impossible to counterfeit or double spend. This decentralized structure allows them to exist outside the control of government and central authorities. And most cryptocurrencies are decentralized networks based on blockchain technologies. Here are some of the basic facts on cryptocurrency. There are at least over 4,000 cryptocurrencies in the market by the end of 2020, and actually it is still growing. The top 20 cryptocurrencies make up nearly 90% of the total market. And the global crypto market size in terms of market cap, it's over $1.5 trillion where Bitcoin pretty much dominates. So I'm going to give you some examples of the cryptocurrencies, which are, I categorize them by functionality and their lineages, if you would say. The first category is money transfer payment mechanism. So since the inception of Bitcoin, which we consider the granddaddy of all cryptos, there are new cryptos coming up with improved functionalities and efficiencies. Some of them are created as the spin-off or forks in the technical term from the original Bitcoin. So the first Bitcoin was created by Satoshi back in 2009. And after that, there comes Litecoin, which is launched in 2011. The Litecoin basically is a spin-off, which is a fork version of the Bitcoin, but with improved speed in terms of generation of block, and also improved transfer, also improve transaction speed. So for example, it takes 2.5 minutes to create the process a block on the Litecoin compared to 10 minutes from Bitcoin. So that is a significant improvement. And after that, in August 2017, there comes Bitcoin Cash, another spin-off or fork version of the original Bitcoins. And it comes with another additional improvement in terms of scalability and the speed of transaction. So the second category is for cryptocurrencies are with a functionality called smart contracts. So following the same logic, more cryptos emerges and providing added functionality and better performances. So the Ethereum's, which is the second most popular cryptocurrency, went alive in July 2015. It was considered the second generation blockchain application. It's designed for application like smart contract. So after Ethereum, in the midst of 2017, another new cryptocurrency come up called the Cardano. Actually, it's interesting. The founder of the Cardano is also the co-founder of the Ethereum, but he left Ethereum after the dispute. Cardano is considered the third generation blockchain application. Cardano aims to be the financial operating system of the world by establishing decentralized financial products, similarly to Ethereum's, as well as providing solutions for chain interoperability, voter fraud, and legal contract tracing, among other things. In the same year, 2017, another crypto came up called a Chainlink. And Chainlink is basically created to incentivize data providers, which called oracles, to act as a bridge between blockchain smart contracts and external data sources. So every oracle, so every data provider within the Chainlink network is incentivized to provide accurate data, since a reputation score is assigned to each. Further, when nodes follow the software of rules and provides useful data, they are rewarded in Chainlink's cryptocurrency called the Link, L-I-N-K. So as of 2020, Chainlink is seeking to support all blockchain-based smart contract networks. The third category with functionality for the cryptocurrency is called interoperability. And with the latest crypto came up in back in March 2019 called a Cosmo, C-O-S-M-O-S. And it's aimed to become the internet of blockchain, which is going to solve the problems of interoperability. So it has embedded function called inter-blockchain communication, called IBC, with hubs and zone architectures. And now we're going to come down to the key point. So what's blockchain has to do with the Bitcoin, and is Bitcoin same as blockchain? So basically, blockchain is the underlying technology which provides foundational infrastructure for Bitcoin and cryptocurrency to operate. A Bitcoin or cryptos is just one of the many applications or functions that run using blockchain technology. And most of the cryptocurrencies, such as Bitcoin, Ethereums are basically public blockchain. So this will answer the previous question that was addressed to Renzo. So most of the cryptocurrencies are running on public blockchain. But however, there are cryptos are run on the permission or private blockchain, such as you may have heard about Facebook was considering coming out with a cryptocurrency called a Libra. And also JP Morgan, the American financial institutions will come up with their own coin called a JP Morgan coin. And also the central bank digital currency called CBDC, which EU and some of the European countries and Canadian central banks, or even Chinese government, are some of the quite a few of the nations are considering to study and launch their own central bank digital currency, CBDC, which is a form on the based on the private blockchain. So in a way, Bitcoin represents one function among the different cryptocurrencies, which is focused on money transfers. At the same time, there are so many types of cryptocurrencies. Actually, everyone can come up with their own cryptocurrencies under certain consensus or algorithms. It's just a matter of whether there's a need for it, what's the functionality to attract the user of it. So crypto can be regarded as one of the applications run on the blockchain. So there are some debates around Bitcoin and cryptocurrency, and I'll list some of them for both sides. The proponents' view are mostly focused on the major benefit, such as decentralization, because it's not controlled by any government or nation state or individual. Ease of transfer, especially cross-border payments, is a lot faster compared to the traditional banking services. And anonymity and transparency. Quite a few private corporations, including investors like Elon Musk, are a big fan of Bitcoins. Mr. Musk has invested about $1.5 billion into Bitcoin in this past February. And his company, Tesla, was thinking about to accept Bitcoin as a payment. So on the other side, on the opposite side, the opponents also have some legitimate arguments. The first is the low scalability, because resulting from the combination of high energy consumption and the low transaction rates due to the proof of work, consensus, and mining processes. So Bitcoin mining really consumes a lot of energy. Actually, it was estimated about 128.4 terawatt hour per year of energy was consumed by Bitcoin mining, more than the entire country, such as Ukraine and Argentina. According to the Cambridge Bitcoin Electricity Consumption Index, which is a project of the University of Cambridge. Cybersecurity is another concern. The main threats are its vulnerability in the mining process and transaction, the lack of security during the storage of the coins on online pools. There's some high-profile security breaches result in huge amount of Bitcoin being stolen. Back in 2013, a Bitcoin wallet service system was hacked. It lost about over 4,000 Bitcoins that was millions of dollars. The third is the price volatility and the lack of intrinsic value. Actually, the Bitcoin or any kind of a cryptocurrency so far right now, we can see them, we can also call them air coins, because there's no real assets attached to or back up the cryptocurrency. So actually the Bitcoin can have easily over 10% price swing in a single day. which we have witnessed during the past months. And the price has really been volatile. The last concern is about regulation. There's no clear regulation on the Bitcoin investment from all major economies. For example, in the US, the CFTC, which is Commodity Futures Trading Commissions, treats Bitcoin as commodity. The IRS, which is the tax revenue services, treat Bitcoin as property. SEC, which is Security Exchange Commission, as the former chairman Jay Clayton said, Bitcoin is not a security, but a payment mechanism. The insufficiency in current payment mechanism are major catalysts driving the rise of Bitcoin. So there is no cohesive regulation, not say within the single country among different departments, but across the board of the global economy. So this will be a big issue. And also there's going to be a lot of area to be improved for the future developments for the Bitcoin cryptocurrencies. So for most government, central bank, and major global financial institutions, they are still watching the Bitcoin from the sideline with doubts. As former chairman of ECB, Mr. Former chairman of ECB, Mr. Mario Draghi, said that he would not call Bitcoin a currency for a couple of reasons. One of them was that a euro today is a euro tomorrow. Its value is stable, but the value of Bitcoin really oscillates wildly. Isn't it a big problem for cryptocurrency like Bitcoin? How can we use them as currency if their value isn't stable? Looking forward to the future of Bitcoin and cryptocurrencies, a cryptocurrency as payment mechanism is still developing with potential to be far more disruptive. Debates about future money is not about creation of new currency. It's about creating new methods to use existing currency and existing units of account. Cryptocurrency will evolve into more effective functional tools to improve efficiency of financial system and to improve financial inclusion and to promote financial inclusion. So as I mentioned earlier, by introducing different types of different functionality of cryptocurrencies, we can clearly see the path and the trend in the future from the original money transfer function, and with the add-on ability of smart contract, and later on develop further into the interoperability, which is to communicate among different cryptocurrencies. We can see each different cryptocurrency create its own ecosystem with their own sets of users. But currently there are lack of communication or interconnectivity between those different cryptocurrencies. For example, it's hard to communicate or to make transactions between Bitcoin and Ethereum, or between Ethereum and Cardano's. So in the future, there will be more application or more cryptos with advanced functionalities to improve the situations. So at last, on China's policy towards Bitcoin and cryptocurrency, Chinese government views virtual cryptocurrency as illegal since they're not issued by any recognized monetary institutions, and they don't hold any legal status that can make them equivalent to money. And so the government advised against their circulation as a currency. So in September 2017, Chinese regulatory authorities have imposed a ban on initial coin offering, which is ICO, a cryptocurrency-based fundraising process, and term it illegal in China. The further tightening of regulation came in February 2018, as China extended the ban to the operation and participation in any cryptocurrency exchange, foreign or domestic. China also recently cracked down on cryptocurrency mining. So now I'll conclude my session, and welcome if there's any question.
Yeah, well, Brian, I have a question. I want to pass it over to you. And this question is, can you maybe explain what a smart contract is? Would you care about digressing shortly and briefly on that?
Smart contract is basically, in a nutshell, a certain algorithm are been built. It's basically a programming language that automatically execute with a preset algorithm, and to execute a certain set of procedures, predefined procedures. For example, like contracts and different negotiation terms. So that's a very short and brief answer.
Well, thanks, Brian. It's let me now just go back and regain possession of the slides. Yeah, the smart contract, of course, it's something that is quite an important element of the Bitcoin, of Ethereum, because they are connected to the crypto payments. So basically, you have the formula of the buyer and seller of or the provider of given services that are prefixed, preconditioned, and on the occasion of the completion of a given agreement, then automatically that makes, for example, the payment to become payable. So it is, and everything is done on the basis of technology, so it makes it everything very, very quick and very simple. Let me. I'm trying to reconnect. Okay, here we are. I am again in possession of the. Okay, I start now an overview of the potentials of the blockchain technology, and here we're talking about applications of the applications beyond the cryptos, and now we're moving into applications which go into commerce, governance, and in fact these are the main three segments that I have divided the utilization of the blockchain technology. And I will just digress, we'll give you some example one by one on these three categories. On the financial side, well, you have on the payments, the digital currencies. We already talked enough about that. But the banks are utilizing the blockchain a lot nowadays in order for clearance. For the more and more banking institutions are using this blockchain related clearing system for the transactions, interbanking transactions. As an example, in Italy, there is the Italian Banking Association that they have promoted this called the Spunto Banca. It is a distributed ledger technology which allows the banks, all the Italian banks that are interconnected, utilizing this Spunto Banca system via blockchain technology, that they can automatically make clearance of and settle the interbank transactions. Same thing, it is possible to be done on an international basis, international remittances and cross-border payments. Clearly, there is an issue about currencies among European countries using the euro. This is much easier. It would be a bit more complicated. And I would say it's the next target, the next ambition would be to be connected to connecting Europe and China. But I see that is not going to happen in the near future. In terms of financial services, the capital markets, you have a digital issuance of trading and settlements of security, very much an important element. The supply chain financing, the trade financing that you saw, mortgages, all the notarization services could be overcome by putting all the mortgage contracts into a blockchain system, by again also applying these contracts that we just mentioned before. Crowdfunding, the ICO that Brian just mentioned, which was very sexy a couple of years ago, and now suddenly it's not as sexy as before, because clearly the whole system is not so inducive, and it has been kind of dropped for raising capital. Insurance, especially for the so-called property and casualty insurance, for like auto insurance for the simple claims, and in combination with the smart contracts, it could have a big implication in reducing costs and having very quick validation of claims. The internal ledgers, it's quite logical, I would say, because here you're talking about maybe large multinationals. They have ledgers that have been spread in the different departments or subsidiaries or in different countries. And all this could be compacted into a single ledger under the blockchain technology system. What is interesting now is the potential application in commerce. So the trade and commerce, the supply chain management. So the management of inventory and any disputes that could be, this has a number of applications. Later on, I will present to you a case study, in fact, related exactly on the supply chain management. Then it's another very important is the product provenance and the authenticity. For example, artwork, pharmaceuticals, etc. Another case study here that will be shown later on. Trade finance, the intellectual property registration, and we know here in China how big of an issue the IP is, and how important it could be to be able to establish, and with the attitude of the Chinese government nowadays to be so keen towards the blockchain utilization, it could be the right moment, the right momentum, let's say, to force the utilization of the blockchain system into registering intellectual property. It could be a good safeguard for the interest of the European entities which have this property, and they're always scared of maybe losing it or being copied, or what else can happen. So this, in my opinion, could be a very important area. Supply chain, again, in terms of agriculture, well, wines, for example, the crops, etc. This is an area that it could be exploded into many different applications in many ways. I don't have to tell you how important it would be to know exactly the provenance of a given wine or another product. I will again deliver a little bit more on this particular issue later on during the case studies. The safety net program related to delivery of seeds, fertilizers. Okay, you were talking about the same thing. I must make sure that the origin of products that are so sensitive to either the powdering, the application of illegal activities that could substantially modify the genetic value of those products. Not to mention the medicines, the vaccination, the food. I mean, we're witnessing this nowadays. There has been recently, I read, I think on today on the newspaper, there have been discovered a number of COVID vaccines that have been tampered, that were, of course, illegal. And these are the problems of today. And in some way, I feel that the blockchain technology can be a contributor to avoid for these things to happen, and to make our life safer, and to be able to also bring proper quality foods at the proper price on the table of all the human beings. The third and important area of application is governance. Well, allow me here to say that this is could be a game changer from many aspects, because you can put everything online. You can have your digital identity, your e-residence, your records of birth, marriage, death certificates, your CVs, your past working experience references, so on and so forth. Everything can be put online, can be digitized, and can be uploaded on a block. In terms of governance, e-voting, well, wouldn't you love to have seen e-voting system on a blockchain in the recent American elections? I think I would have loved, honestly, we would have saved ourselves of this charade of back and forth and who won and who lost. E-voting is, by the way, something that it was experimented on a test base in, I think it was in West Virginia, I think it was back in 2018 on a midterm election. And they run a test using the e-voting system. How would this work? Well, it wouldn't be very simple. Each eligible voter will be given a token, and the token then you would be able to use it by assigning the token to your preferred candidate. That would leave tracks, would leave the breadcrumbs on saying whom was you voted for, and so on and so forth. So in that case, it would be an extremely beneficial advantage for clarity. Government record keeping, criminal records, nobody could tamper with them. How many times have we seen some people that have been in the criminal gangs that have been able to simply their past criminal records vanished and never seen again. So this putting everything on a blockchain would secure that whatever has been uploaded on the chain, there it is and there stays. Well, tax, yeah, tax fraud, well, you name it. I mean, that we've been reading on the newspaper, I wouldn't say daily, but very often cases. And also there, if you put everything on a chain, on a blockchain, then your tax record is there. And you can always have access to it if you have clearly the key to have the access to that particular information. Protection of critical infrastructure against cyber attacks. Nowadays, more than ever, a key element of importance and interest. Healthcare is electronic medical records. This could be extremely important and vital for the doctors, for medical people that have to maybe know a better and have a better understanding of people that maybe they lost a memory, or people that suddenly are unconscious because of an accident. If the doctor could have quickly access to all the medical record in one chip, in one area of information, that would be very beneficial, and it could also save lives. Ownership registers. Well, here basically, I even had my own conflict many years ago, because I'm old enough to tell you stories where computers were not existing yet. So land registries, property titles, it can happen that you have so many disputes because errors, omissions in the registration, in the property books in municipalities or local offices can happen, and has happened and will continue to happen. One solution, in fact, could be to upload all those information, create a historical link, a historical string of blocks chained with their own time ledgers, and so on. And of course, I put etc. because there are a lot of other potential applications that are there that are so vital, that could be so vital for our everyday life. Now the question probably comes, why doesn't that happen? Well, let me put it, in addition to the cost, of course, of structuring this thing, which is not, it's not the easiest thing to do, but it's also, don't forget that anyone that enters into this system is just like stripping yourself naked. You are there. You are who you are, and you provide the information of everything that you have. So when you enter into these kind of a system, especially in in a supply chain concept, then you basically tell that this is what you produce, this is how much you produce, this is the area you produce it, from this day to this day you had your harvest, and those processes took you so much time, etc., etc., etc. So all this is visible by, of course, all the ones that are allowed to visit, allowed to see it, but they're all visible. Not everybody, and not all the time, everybody is ready to strip themselves naked and be able to be seen in all different areas of their activity. So I complete here my quick flash on the applications beyond Bitcoin and cryptos, but as I anticipated during this short period, we will continue and we will bring to you examples, we will bring to you case studies on the module 6 later on. So back to you, Brian. And as before, if there are questions, I'm ready and willing to answer.
Yes, Renzo. Actually, there are